Hello, happy December. It's Ryan back with West Penn Financial. Today, we are going to do a quick training on what I do with buyers to get them pre-approved and what I feel is the most important document for buyers and agents through the process that frankly is underutilized in my mortgage side of things. And that is the loan estimate. So first off, if you work with me, if your clients work with me, the loan estimate, and the loan estimate is a specific document, we'll go over this next, is the only document I use to show your buyer's estimates. This document was put into play in 2015 with the new TRID rules, and the TRID rules said once a loan officer has 6 pieces of information, they have to give a buyer a loan estimate. Though now in 2023, I hear a lot of other lenders say, oh, they will get their loan estimate, that they being the buyer, once they complete their mortgage application. Well, that's where the issue comes in, because according to the CFPB in the laws of 2015, a mortgage application is defined by when a loan officer has 6 pieces of information. Those 6 pieces of information I've highlighted on the screen. And frankly, when you're putting an offer on a specific house, you absolutely have these 6 pieces of information. The only one you may not have up to the offer process is the address of the home that's looking to be purchased or refinanced. But once a loan officer has the address among these other items, a loan estimate must be issued within 3 days of that time frame. And these pieces of information are very simple. It's the buyer's name, the buyer's income, their social security number for when I pull credit, the address of the home you're putting an offer on, the estimate of the home's value, and what the loan amount will be sought. Those items are all known by the loan officer when they put in an offer. So if you guys put in an offer, you need an estimate from me, we will go right away and share the loan estimate. So the loan estimate is right here on the screen. It is a 3-page document. It will always look the same. That is not a Ryan form. This is not a West Penn Financial form. This is a form that all lenders have to use. So first at the top, you'll always see the lender's name, their address. If you're working with a client that you're not too familiar with the lending institution, you can always double check who they are, what they are right at the top of the screen. Secondly, we'll go over just pertinent information on the file. You can double check the date to make sure that this is an accurate current estimate, the borrower's names, the addresses, the sales price, and then on the right-hand side are the actual terms. How long is the mortgage? If it's a purchase or refinance, obviously it should be a purchase if you guys are involved. Is the interest rate a fixed rate or an adjustable rate? You'll be able to see that right here. What type of loan it is. A lot of times if a lender might think they're doing an FHA loan, well, the agent thinks they're putting an offer for a conventional loan. Right here, it will be clicked or check marked what the type of loan it is. Also, if you or the buyer is curious if the rate is locked, there's a rate lock that says yes or no. Usually you don't lock the interest rate until you have an accepted offer. Now we'll get down into the specifics of the loan terms. Right down here, you'll have the loan amount, you'll have the interest rate, and then you'll have the monthly principal and interest. No's all the way down the right-hand side. None of those can increase after closing. That's going to be the case unless it's adjustable rate mortgage. Then you might see yeses coming down some of these sides. No prepayment penalties for West Penn loans, no balloon payments. You want to see no's in this section. So next, center of the screen, we'll go over the estimated payment. Of course, most important information, one of the most important information, what the payment's going to be for this home. If there's mortgage insurance, you'll always see 2 columns. There is mortgage insurance on this estimate because it's only 10% down. So you'll see a payment from years 1 to 13 and then years 14 to 30. All that's showing is that the mortgage insurance is estimated to drop off after 13 years, if the buyer lets everything happen naturally and not look at adjusting the value, not looking to get their updated value to get their mortgage insurance removed, this will stay on for 13 years. After 13 years, it falls off, and that's the only difference in the payments. But most importantly, the payment shows all 5 parts of the mortgage payment. There are 5 parts, starting with the principal and interest. So the principal and interest, I can't highlight anything, of the $1,296.13. That literally drops straight down to principal and interest. So we got 2 parts of the payment taken care of. Next, you have mortgage insurance. This is dependent on the buyer's credit score, down payment, loan amount, all those fun things. That is the 3rd part. Then the 4th and 5th part of your mortgage payment is your estimated escrow. This is the part that confuses everyone. Your escrow payment is detailed in the section below. So the 380, we got to bring it down here. And as you can see, estimated taxes, insurance, and assessments, that's for your escrow. It says 380, which is the exact amount up here, 380. And it checks marks that property taxes and homeowners, yes, are both in the escrow. So that 380 a month is in total homeowners insurance and property taxes estimated at this time. So you can see what's in the escrow, what's calculated, it gets brought up, and then it would show you the full monthly payment for the mortgage. Down below, it then gives you a recap right before we go to page 2 that's going to break everything down. So for this estimate, there's $13,023 of closing costs. And with the buyer's estimated cash to close with down payment and closing costs would be $23,023. That's page 1 of the loan estimate. Now we're going to go to page 2 of the loan estimate that breaks down every single closing cost. So page 2 of the loan estimate is very, very important. So we'll go to that page now, and here it is. Every column is always going to be the same for every lender. So that's why this is important. Most closing costs or closing cost sheets, they're all going to be different for lender to lender. They're going to have different terminology. They're going to have different setups. They're all going to look different. And it's very, very difficult to compare a cost sheet to a cost sheet. It is not difficult to compare a loan estimate to a loan estimate because they look exactly the same. So page 2 breaks everything down in every single column the same for every lender. So section A is always the origination charge. So when a buyer asks me, what is the full cost of my loan? You need to look at 2 things. 1, the interest rate. 2, the origination charges, because there could be points in here that is adding to your mortgage costs. So section A of the loan estimate goes over the actual lender charges. That's the only section that's going to have lender charges. Next, section B is going to be different a little bit for every lender depending how they do this. So there's always third-party fees through the mortgage process that you may not be able to shop for. For West Penn, those 2 third parties are the appraisal and the credit. We use a credit agency. We use appraisers. We don't do appraisals ourselves. Those are not allowed to be shopped for by the buyer. Other items can be shopped for. Those items we're going to choose because those are companies that we work with. Now, section C, on the other hand, are services you can shop for. So section C is your title fees. So as we all know, buyer agents can pick what title company you work with during the transaction. So section C is going to be every single title company's fees. This is going to range depending on what title company you use. So if you get an estimate from a lender and they're not sure of what title company you're using, Section C is going to be a complete estimate until we figure that out. You know, on the lending side, we're not mind readers and we don't know every company's cost just off the top of our hand. So this we would have to be honed in on unless you're using Everest. If you're working with Everest and you're working with West Penn, obviously we know Everest fees, they're built into our templates and we can easily get those quick and accurate fees to them. So section C is always the title fees. Going up to the right-hand side, section E, taxes and other government fees, always two items here. You have your recording fees. So we know in Western Pennsylvania, usually record the mortgage or the deed or both, about $188 a piece. That's where the recording fees come from. The next column is transfer taxes. Transfer taxes, again, we know to our area, usually 1% of the purchase price. It can be different depending on the municipality. So here for a $200,000 purchase, $2,000 in the transfer taxes. Out-of-state lenders may not be too familiar with transfer taxes. They may leave them out altogether. They may see a 152 zip code and they may use the city of Pittsburgh transfer taxes, which will be way too high if they're not in the city. So always be careful when you're looking at the transfer taxes. Section F is an item called prepaid items. So in the mortgage process, the buyer does have to prepay some items. Two that they have to prepay is homeowners insurance. So homeowners insurance is always paid a year ahead of time. You will pay your first year premium at closing, and then every month you pay your mortgage payment, your homeowners insurance is part of your escrow. So each month your payment will get put into your escrow account. A little bit gets added in each month. When your mortgage insurance or your homeowners insurance gets paid every year, automatically out of your escrow account, a buyer never pays that out of pocket. So you pay the first year at closing, every year after that is paid out of the escrow account. A buyer also has to pay prepaid interest. This is interest from the day they close to the end of the month. Please be very careful. At West Penn, it is customary for me to estimate 30 days, no matter what, at pre-approval, because I have no idea what a closing date is. Other companies will put 1 day in there because you can put any amount of days you want. It might be 1 day, depending on their closing day. We just don't know that at that point, so I just estimate 30. But if you estimated 30 days, it's 1,132. If I only estimated 1 day, it would estimate as $37.74. That could be a big difference in closing costs. And again, we're just estimating. If you don't know a closing date, you should really leave that for 30 days at that point. Section G. This is another contentious topic and category here when it comes to closing costs. I believe that all estimates should be given like as a worst case scenario. If I don't know items, I can't assume them, so I'm not going to update them. With the initial escrow, we always have to take an extra 2 months for the homeowner's insurance, and then you have to take some sort of months for the property taxes. Now, I estimate 12 months because I do not know when the property taxes are due yet, right? We haven't talked to any tax collector. We don't know when they're due. We don't know how much I'll have to collect. This could be as low as 3 months of taxes being needed to be collected. But again, if I put 3 months and then it comes back being 12 months, the buyer's going to have thousands of dollars more needed at closing. And everyone's going to ask, well, why was the estimate so low? And frankly, lenders will make this low because they're allowed, just to make their numbers look less at pre-approval. But no matter what lender you use, the initial escrow payment is going to be the same. It's just how it's estimated at the beginning and how some lenders look at it. So numbers are going to be the same in the end. I try to be accurate with my numbers, so I do everything as a worst case scenario. Here in section H, we have title insurance for the buyer side. Anything else could be broken down in here. If there's extra commission, if there's any extra cost that doesn't fit in any other column, it would then be put in column H. The total closing costs are $13,023, just like we saw on the first page. The down payment is $10,000. So the estimated cash to close for this buyer is $23,023. That's how it breaks down. It should be very simple. Every loan estimate looks exactly the same. And then on page 3, this is just a breakdown kind of the full overview of the loan. Again, it will have the specific loan officer's information at the top. It will give some information about comparisons. If the buyer is looking for the APR is on the back, page 3, and then just other considerations. Will their appraisal be needed? Is there homeowner's insurance? Talks about the loan and the late payments and all of that fun stuff. But this is a loan estimate. Please ask for this document. Your buyers need to be getting this before they put offers in to know exactly what their numbers are. If you have any questions, if you have any buyers that need a loan estimate, give me a shout. That's what I'm here for. And everyone have a great day.